The last stock on our list before we get into the 3 watch list stocks flagged by our analyst is 3M. 3M is a multinational conglomerate known for its wide-ranging services both in the United States and internationally. The company operates through 4 primary segments: safety and industrial, transportation and electronics, healthcare, and consumer. The income statement reveals consistent revenue, yet there's a noticeable decrease in net income. This decline is significantly attributed to litigation expenses related to the military earplugs and environmental liabilities concerning PFAS chemicals. However, these should be shorter-term headwinds. 3M is utilizing AI as well as deep learning to optimize and improve their health information systems. Overall, 3M has maintained a strong balance sheet as well, boasting significant operating cash flow of $6.6 billion. Ratio analysis indicates that 3M is valued more attractively than competitors like Honeywell and General Electric, as well as the sector benchmark overall. Despite an anticipated lack of revenue growth in the near term, 3M presents itself as a compelling value opportunity. In addition, 3M is among the highly coveted list of dividend aristocrats, meaning they have both paid and grown their dividend every single year consecutively for 25 years or more.